Hey everybody, hey traders, welcome back to the Pulver Report. It is 9 o'clock on Monday, July 15th. Hope everyone had a great weekend. Let's get started for today's trading. Still working on the laptop, but no big deal. Having two screens is fine. I prefer 4 and a supercomputer, but it is what it is. I should have, hopefully my computer shows up this week. Let's just say interesting weekend. We'll leave it at that. Get the chat up here. Say good morning, everybody. We're looking at pre-market up a little bit. I'm going to into another workspace here. Let's go intraday trading, my little opening range breakout. Friday did play out a little bit like I expected, which was we tested the highs and then faded pretty quickly off that towards the end of the day. That's an incredible amount of volatility for a couple of days of trading. Wednesday we had our little low drift breakout, directionally from 557, just almost 557, all the way up to all-time highs at 562. Thursday was our big kind of single day rotation where, Mag 7 was down, small cap was up, S&P was down, Qs were down, Dow was steady, and IWM was way up. Friday, everything was up, but Friday quickly faded back in. So, again, what I'm watching is, are we going to break? Let me bring out my drawing tool. Are we going to break last week's high, which is now right here? Okay. Are we going to break last week's low? We'll find out. Probability is we break the highs, we stay higher. We break the lows, we stay lower. If price stays inside for the week, it's fairly understandable. We are kicking off I'm going to move this floor. So what's this floor point around? 554. So 542.50, just change this to 554 right now. See if that level breaks. Market's up right now, pre-market higher, up by almost $2, which is a pretty big jump out of the gate. So that's just shy of half 1%. If we look at half of 1%, we are looking at a probability that we jump higher, stay higher. And even for the intraday gap that we might see here in about 25 minutes, it may not be filling. So SPY is up. Qs also up close to $2. A lot more volatility on the Qs. They actually finished in the red from last week. Monday, all-time highs. Tuesday, all-time highs. Wednesday, all-time highs. Thursday, crashed hard. Friday, right back where we started. So I want to just watch everything to see if we break the lows, break the highs, where's the likely direction and flow going this week, given what happened over the weekend in Pennsylvania with former President Trump. We'll have to see how the prices are going to react to that. We have earnings season this week, which gets a little bit more exciting. I think this week we have 116 stocks reporting earnings. 116 this week. Some notables here I pointed out in my Discord channel: Goldman Sachs, BlackRock, Bank of America, Morgan Stanley, Charles Schwab. Obviously, a lot of those kicking off with investment firms, custodians, big investment banks. JB Hunt for transportation, distribution, so kind of your FedEx and UPS type thing with freight. Johnson & Johnson in the healthcare space. ASML Holdings, Discover Financial Services for student loans and corporate financing. Alcoa for steel. For aluminum. I was thinking of CLF and X. Alcoa is for aluminum. United Airlines, see how the discretionary spending goes with vacations this summer, or how are they going right now? Domino's Pizza, one of your kind of household, fast food, maybe staples for the week, similar to a Chipotle. Domino's has been surprisingly a great stock over the years. Blackstone, DR Horton for food or for home builders, Alaska Air, Netflix. If we want, kind of a sprinkled in Mag 7 or top 10 stock, Netflix on Thursday after market. I've told traders this in my Equities on Demand trading room, and I've shared this in my live sessions. I'm excited for earnings season this quarter. More than likely, a lot of the trades I'll be taking will be pretty cost effective. I'd like to see the market, give us movements that are outside of the expected ranges. But I could see a tightness in price just because we've had most of this year has been beating expectations or missing expectations, and they've gone way beyond the expected moves. And that's made earnings season pretty easy. I'm just being a little bit more defensive, trading the indexes, a little bit more defensive, putting on some hedges just in case we're going to match with some of the technicals we see which to me, they still scream overbought conditions and a correction is likely, but price has not supported that yet. So I keep saying this, until price supports a break of a floor or a break of support. I mean, the last week, Thursday, was the closest thing we had to price actually responding to some type of sell-off. And what did it do on Friday? Pretty much ignored the entire thing. So we have to watch and see how price action plays out this week. We've got some earnings to sprinkle in. CPI data came in better than expected, so the market jumped on that. We're going to see what the small caps are doing. If the IWM, the IWX, anything with the Russell, just keep an eye on that to see if small caps are rebounding in a big way. Go back to earnings here for a second. American Express, Halliburton, Schlumberger. Those are both energy plays. Halliburton, Schlumberger, energy plays. American Express, again, kind of the health of the consumer out there. So of these notables, I would say I may look at opportunities on. I do have some exposure in Alcoa. I may look at some bigger picture trades on Johnson & Johnson. If we have some higher implied volatility coming to this week's earnings. Domino's Pizza, maybe I'll just do the math on that one. Netflix, more than likely, that's going to be one of my earnings plays this week. Cost effective, I'll probably play in the money credit spreads on that and go towards the expected moves. And if we hit that or exceed that, should be pretty easy profit. If we don't, I still have time on my side. So maybe going out, a couple of weeks, or maybe even going out a full 30 to 60 day cycle and just give Netflix a chance. If I go out that far, there's risk of assignment if we have a big move one way or the other, but we'll take a look at those prices. So that's where we're at for earnings this week. Again, up a little bit pre-market, but I'll be watching the highs and lows. Okay, so high for the week, low for the week on the SPY and the Qs right here. Go back to this chart, go to the Dow, the DIA. We came up and we tested all-time highs on, Friday. Yeah, we tested all-time. Actually, we tested and poked all-time highs on Friday on the Dow, which again does look fairly convincing that having a move like this, to me, I see this as a bullish ascending wedge. And if the market's going to put some pressure to the upside, then hopefully we are breaking and going higher. Where could the Dow go? I mean, to me, if there's going to be kind of a broader market target, it would be the SPX at 6,000 or the SPY at 600. If that is enough to carry the markets up, I would suspect that the Qs are up, the Dow is up, the Russell, if there's a catch-up trade for small cap, all those are up. But anyway, as we saw, the DIA struggling here as the SPY's making highs and the Qs are making highs. The DIA has been struggling, and all of a sudden we had 3 big days last week. So that would have been Wednesday, Thursday, Friday last week, right? This one didn't have nearly the sell-off that we saw elsewhere, and Friday had a nice little push to the upside. So I still remain long DIA. IWM has started to get more aggressive into. We're trading at 114.90, which is up towards Friday's highs. This is another one that I think a catch-up trade is pretty solid. There's ways I want to position for this going into the next probably 60 to 90 days, maybe even out to the end of the year. One way that's cost-effective is I'm trading a lot of puts down here. Those are, I've got a short-term plays out for 30 to 60 days. I have some leaps as well on IWM going longer term. I may be looking at some pricing today. If I went up to all-time highs, what's a 230 or 240 going to cost me? I don't want to go up too far in time just because I don't want to pay for that big time premium. But if the market is playing catch up in a fast pace, then those deltas. Let's say I put a 230 or 240 trade on, and we look at the Russell hitting all-time highs. I mean, if that's trading at let's say a 25 delta right now to the upside, then if price actually gets there, let's say in the next 6 months, and I'm out a year, well, that's going to be trading at a 50 delta. So whatever it is, I can add that value and probably look at a 25, maybe 30, 35 delta calculation. I could have a conservative estimate of what that call option would trade for. But obviously I need to be right direction, and I don't want to overpay for going long, which would be I either one do in the money call options, which are going to be pricier, but then I move with that added delta. If I started at a 70 or 75 delta, by the time we're moving in this direction, we're probably closer to a 90 to 95 delta, which enables me to get more of that realized profit. But it's way cheaper, obviously, to go out of the money and see if price actually responds to that. So couple of plays there on IWM for small cap. Go to the dollar index. I just built this watch list. I should have built this a long time ago because I do this stuff every time we're live in these sessions. Now I can just go through my typical weather report list. Let's have a discussion. So Daniel, good morning. David, good morning. Chris and Lori, good morning. Good morning and happy Monday. All right, nice to see everybody here. And if you're tuning in, feel free to ask some questions, ask for some charts. If you have any requests, let me know. Fed rate decisions July 31st. Okay. I was in Chicago for the weekend at a tasty event, which was great. The venue is at Park West. Saw Tom Saza team. Great as usual, great as expected, and always a lot of great takeaways. And one thing I'm looking into this week, and I'll let everybody know on this, I'm looking into Tasty FX as a U.S. broker. I've been with Awanda for a long time, and perhaps my time with Awanda is coming to an end. Just because it's been pretty disruptive on robot trading. I'm finding it harder and harder to get proper support when I need questions. I had some issues in my web platform last week. Their chat team, spent the time with me, but nothing was resolved. I'm fortunate to have a good working relationship with Tasty Trade on my stocks and options and futures trading. And so, it used to be IGUS. It's now called Tasty FX. And I want to see if I can get similar permissions as a U.S. trader. Keep my spreads pretty low. If there's any rebate programs, any type of broker sponsored VPS, do they also offer non-FIFO for different trade sizes? Do they have nano lots? Things I've been pretty happy with as a U.S. trader, and it's kind of as good as you can get as a U.S. trader. If you trade nano lots, you can trade really, really small. If you have non-FIFO permissions, you can manage trades in any way you want. Obviously, if there's good servers to house VPS and no disruptions with those servers, then you're not going to mess up your robot trading, which has been the most frustrating thing the last probably 2 years of the Wanda is server switch, having to manage positions manually because it's not just my accounts, it's also for managed accounts and copied accounts, and that is very taxing to all of a sudden have to be responsible for not just my open positions but many others. So as I say, I just want to trade. I just want to focus on the process. Broker that's not going to be disrupting my trading and making it harder for me to trade. And so anyway, I will let everybody know on that. If I do make that change and make that jump into Tasty FX, I will post it in my Discord. I'm looking for some type of if I get an affiliate link with them, great. If I'm an industry broker with them, great. I'll see what I can muster up here in the next couple of days. Alrighty, dollar index. Dollar index, we're trading at 104.11. I'm pretty firm on this number here, 103.90. If the dollar is going to come down through this level, I do think that the dollar dropping is good for the stock market. We've seen the stock market making all-time highs as the dollar is getting weaker. I still think this range could hold. So I'm not full on like, oh man, the dollar's getting weaker. That's a directional trade. Look, if we break 103.90, I think there's good setups in the dollar to be short. Okay. If we bounce off 104, 103.90, and we start to head back up here into this range, I still think this is an indecision zone. Okay. Indecision, meaning we're bouncing off the lows, maybe respecting the highs, and we get some type of short-term direction, but nothing that makes the dollar kind of a make or break scenario. All right. We obviously had some drama in the Japanese yen the last couple of weeks, so we're watching the yen developments. I still want to look at the bigger time frames on the yen crosses. If they don't break major trend lines like the dailies and weeklies, I'm not full on looking for yen strength. If we talk about currency strength this morning, anything that stands out, the New Zealand dollar is super weak and the volatility is starting to, expand a little bit. Is the New Zealand dollar going to stay weaker? I mean, sure, it seems like it. We got limited out on our Aussie New Zealand, which looks like that's running even further. We got limited out around 110.50 from a 108.30 entry. So grabbed a couple hundred pips there, which is nice. Everything else is very clustered. So the New Zealand dollar seems to be the outlier right now. Going into Friday's trading, Thursday was intervention on the yen. Friday was a bunch of chaos on the yen. And the markets were pretty nuts there for a couple of days. Wednesday was a directional day. Thursday, directional day. Friday, directional day. Even though the price didn't really do a lot, there was a lot of intraday volatility. So how does it translate into the next couple of months? Could be something, could be nothing. But let's take a look at those New Zealand dollar pairs and see if anything looks promising. Looking at the dollar, if we break below 103.90, I'm not opposed to looking at dollar crosses individually and saying that the dollar has a chance to get weaker and individual currency pairs could show some good setups. But if I don't like the trade, like the pound dollar, for example, or dollar CAD, if the dollar drops like this, I'm probably not going to bail on my dollar Swiss. I'm dollar Swiss long. I'm going to stay dollar Swiss long. Okay. But I will be watching the dollar. Oil. I read this morning on Opening Bell Daily that Kuwait had just discovered a big oil glut, something like that this morning. But I'll look into that more. I still think oil is pretty bullish. So my stop losses are way down here. I'm trading futures. I'm trading USO. I'm looking to see if if this is a bullish pattern. Is this a chance for oil to settle back in and then have another push higher? Resistance around $90 to $92. 95 would be a bit of my kind of toppy price on oil if I'm gonna put a call out there for when to look to sell. It'd be in the 90s. Right now I'm still maintaining any type of pause or pullbacks. I'm still looking to get long on oil. Gold and silver. Gold at 24.15. We've had a really nice run off these equal lows. We had a test back here in May, test in June, test in late June, and gold is up around 5% in just the last couple of weeks trading. It's still not breaking all-time highs yet. That is the big discussion. Will we see gold again at all-time highs? I have GLD that I own. I've got gold futures that I'm in. Stop losses below these levels. If we go higher and break all-time highs, profit on futures contracts and letting GLD run a lot longer without trying to get in the way. I'm not even putting cover calls on it. I removed the cover calls last week, and I'm happy that I did because I was doing that right around here. As soon as we were starting to test this level, I removed the upside on GLD, and now I'm letting it run pretty much free in open space. If we break the all-time highs, I think silver and gold both look pretty good. Silver, to me, this one looks, again, I've said this for a while. Technically, silver looks better. I like that we took out this recent high. I'm hoping that silver is up here with some type of bull flag position. So if we have a pattern that breaks up again, we take the highs out around 32. I'm looking for a measured move on silver towards 35.67. That projects my SLV out towards, we're trading slightly softer on SLV this morning. That puts SLV up here towards 32.78. If you look at /SI for silver futures, we're looking at 30.89. So do we break these recent highs? I would measure this move on SI up towards 35, almost 35.70. But I'm still long silver, and I'm trading silver futures. I have some credit spreads all the way back down towards 26, 26.25. I also have some spreads at 28. We put those on last week. So silver futures, gold futures, I'm bullish on both of those. If we go sideways, it's totally fine. We still get paid as long as these lows hold. If we go up, that's fine. But I'm not looking to necessarily chase directionally outside of having some ownership of SLV and GLD. And speaking of SLV, I do have some naked puts that if I'm assigned, what the Tesla, what the heck? SLV, I would be looking to take assignment at 29 and 28. If we actually close this week on SLV below 29 or below 28, I'm going to take some assignment on SLV, which I'm actually very happy with. I initially had a 29, 28, 27, 26. And if I'm only taking assignment maybe on the 29s, that's okay. I'll take my shares. I'll have the credits from all four of those puts, and I'll lower my cost basis by about $3.60. So I'll own shares of SLV around $26 or less. That's not a bad place to start considering we're trading around 28 bucks right now. And I'm hoping that we're going to see at least an upside move towards 32 and change. And that's for a wave 3. If we have a wave 5 or we have this channel, I would certainly love to see silver get up into the mid 30s here, SLV to the mid 30s, or even a measured move out here towards $45. All right, what else? Let's go into Bitcoin. Nice little comeback on Bitcoin. Not going to lie, this is playing out very, very closely to what we talked about. I had said, watch out for price to break these lows and give us a bit of a bear trap, but hold that level of support, find these pockets. That's what happened. So we had 56.6 on the lows. We tapped those lows. We tested this pocket, and Bitcoin's turned up nicely. I said last week that is, if Bitcoin gets back above, $60 to $61,000, I'm a little bit more bullish on this. So if this is, up, sideways, and then another push higher, is Bitcoin coming back in a big way? It certainly seems more promising on the right-hand side of this trend line. So I like that we're getting there. It'd be nice to see this, kind of break and pause and then retest some highs. So I think Bitcoin is in a way technically been saved a little bit. Let's see if there's some follow through there. CT or C trader, but you have to have an offshore entity, right? And that's not necessarily what everybody has. So I mean, I get it to be great. I mean, if I had an offshore entity, or if I'm a PR non-US, and I'm working abroad, I mean, of course I'd love to have a non-US broker. So believe me, it's crossed my mind, especially going into this weekend and maybe what we're going to deal with coming into 2025. If I have opportunities to live abroad, I might be looking at it. So yeah, I mean, as a trader, it's like you just want to go where your money's treated best. If you're putting money into a broker platform, you want your money to be safe. You want to trade. You want low commissions. You want a variety of assets to trade, and just you're trading. It's already hard enough. So, but yeah, there's a little bit more work involved if you're a U.S. trader trying to get. I mean, look, I have really good working relationships with Forest Park for a long time, 8cap for brokers specifically, 8cap, TradeView, Pepperstone, Global Prime, a lot of non-U.S. brokers. And I just flat out asked within the last couple months, I'm like, what would it take for me to be, I'm a U.S. trader, yes, but what would it take for me to be brought in as a client? They're like, we can't. We're not going to. We can't. Like, we can't take U.S. clients. So I understand. But what I'm trying to do as a U.S. trader is what's the best place for me to go as a U.S. trader? And I know we don't have a lot of options. I'm not interested in a prop firm. I'm interested in a broker that's able to take several $1,000,000 and let me trade. That's what I'm looking for. So that doesn't come with just like, oh, this broker offers me as a U.S. trader 201 leverage. Cool. Well, most U.S. brokers, all of them, in fact, probably only offer 50-to-1 leverage. So that's already a red flag for me. There's been all sorts of disruptions in the prop trading space for U.S. traders especially, and I am not looking to have any type of suspicious activity or jeopardize any type of accounts. Okay. All right. Anyway, Bitcoin coming back in a big way, behaving to what we had expected to see, which was a bit of a bear trap. Ethereum, same thing, just came down to nice support. Ethereum is also heading back up. I've talked about this level at 3,500. We get back to 35. Look for this to be a nice little low. Rip back up here towards 35. Have any type of pause. See if we can head back up to highs again. Ethereum, by the way, not at all-time highs. So if we break above this level, our all-time high is around 4,800. Okay. So if we're going to see a rip on Bitcoin or Ethereum has, I wouldn't say necessarily more upside potential, but because we've measured moves above 48, there's a way to look at this as, oh, this is where it's been in the past. It could get there again. Similar to why I like the Russell right now. If we're going to see bullishness in small caps, the Russell has upside potential to get to those all-time highs. And right now that's pretty exciting. If we get there, great. It's easy to measure, as opposed to the Qs or the SPY, which is, last week we hit all-time highs 4 times. Monday, Tuesday, Wednesday. Actually, did we have 5 all-time highs on the SPY? I think we did. This is crazy. Let me check this. Look at this last week. We had we had 5 all-time highs last week. 1, 2, 3 on Wednesday, 4 on the open Thursday, and 5 with a ridiculous comeback trade on Friday. That's crazy. So why is it important to watch this? Because this high, this low, is there more to this, or is it just a lot of noise and price is still kind of vulnerable to the downside with overextended conditions? Our price to earnings ratios that we have right now are stretching back to some pretty high levels we haven't seen for, the last time we saw some of these levels were kind of creep up into crisis mode, where we had some big sell-offs coming shortly after. So I am a little suspicious of the stretch without having some type of healthy correction. But obviously I'm not trying to call tops. I'm just trying to properly hedge, stay out of the way, keep my probabilities really high. All right, we're good on Bitcoin, Ethereum. Okay, very nice. Copper, I'm going to see if copper will come back and settle back into these lows. So we've had a really nice swing from low to high. I looked at this potentially as a push, a little bit of a pause or a pullback. If the dollar gets weaker, that could also help copper head to the upside. If we're looking for a global market rally, that could also help copper to the upside. It'd be kind of nice to see copper, maybe, I don't know, ideally maybe settle back into the same lows again and see if we have some type of wedge like so, where we are sideways, 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 kind of round out this level and see if copper can head back to range highs. I don't know. If I want to take a trade on copper, I can keep it very simple, keep it out of the way, trade something on copper futures. I believe there's still micro futures as well for copper, but I'll look into that. I tried to place a trade last week and I didn't get filled the price I was wanting to, and I just canceled it, and I'll revisit it this week. The Nikkei 225, we're at 41,190. We've fallen pretty hard the last couple of days trading in Japan, but nevertheless, we're at all-time highs. We know there's a lot of drama surrounding the Japanese yen. We've got to watch both. If the Nikkei if the Nikkei is going to continue to rally, the Japanese yen is likely going to stay weaker. If the Nikkei comes and falls hard in a big way, Japanese yen is probably going to get stronger. Okay, I mean, if you look at these big periods of, okay, Nikkei is ripping like crazy, what's the Japanese yen done? Super, super weak, right? So as this has been dropping for the last couple of days of trading, the Japanese yen had a bit of intervention. If anybody looked at FXY is an ETF for the Japanese yen. We jumped up in a big way towards 58 and change. I am protected with a debit spread 58 by 50. I'm also long with a break even at $60, and I'm looking for a move into the 70s. So, and this is like kind of a currency-based hedge, but just trading it a little bit more cost effectively, like the ETF as opposed to the currencies, which would cost negative swap, negative roll financing every day. So, Japanese yen, keep the technicals really simple. If we break the trend line, we break above $60 or $62, sure, there's room for this unraveling and this unwinding in the carry trade. But I wouldn't be surprised if this is going to be noisy, maybe drift to some fresh lows again, and then we have to wait for the big breakout. Okay, I'll wait. When do I want to get long on Japanese yen futures? Probably there. When do I get long in Japanese yen and currency trading? Probably there, with good, clean confirmation. Not trying to guess or call the bottom here in this case, or call some of the tops in the Japanese yen crosses we trade in Forex. Okay, the DAX German market possibly stretching back up towards all-time highs. We're getting pretty close. The FTSE in the UK down from the peak here in May. The Hang Seng in China peak in May. Looked a little bit better last week. Just kind of got knocked back down a little bit. GDP announcement for the country. So I think it was like 5.3% GDP expected, came in like 4.7. So a little bit more of a sluggish GDP for China. Stocks I'm watching. Baidu had a big rip and faded pretty hard. Look at that. Just freaking what? Just a lot of volatility on some of these Chinese stocks. So I did do some pretty serious rolling. I own some shares of Baidu in the 96, 97 zone. I've rolled this out and up. So I have covered calls at 110. I have covered calls up in the 120s and 130s. Ideally, I'm just trying to be patient on this stock overall. This might be something that has to take more time to carve out some rounded bottoms. Maybe its volatility looks like this. Maybe I'll adjust my falling wedge scenario. But if we end up getting out of this, and one thing too, it's like if we have a Trump presidency, I don't know if that's good or bad for China. Is that deglobalization? More than likely. So who knows? But is this the company that's crazy exposed to it? I don't know. I mean, I'm trying to keep the Chinese exposure fairly concentrated. It's Baidu, it's Baba, it's FXI, KWeb, and that's it. I mean, it's mostly options. I do have some shares of Baidu, and I mean, I personally own Baidu around $88. My clients, I've got the break evens down to like 96s and 95s. So I like the technicals on this. I just I'm curious how this all kind of plays out with, maybe the U.S.-China relations moving forward. All right, let's talk some Mag 7s here, talk some earnings. Apple, some fresh all-time highs as of last week's trading. 236. I mean, Apple's up to 3.63 trillion dollars market cap. This is now a big stretch away. Microsoft 3.37, Nvidia at 3.22. So Apple, in a big way, has run away by about 300 to 400 billion dollars in market cap. What a ridiculous stretch this has been. 165 to 236. Apple has kind of renewed its dominance as, oh wow, this is a tech play that actually had a ridiculous amount of volatility. Instead of Apple being like, oh, it trades just like the S&P, it's very safe haven, it's large cap value tech, not trading like it. I mean, this is trading like it's on a mission. So huge run to the upside on Apple. Again, a pullback. Hopefully, will or a pause. I mean, stocks don't like to pull back unless there's something else happening. But typically, even if this is just a pause, it'd be nice to see a pause. Otherwise, this has been straight up from 165 all the way to 240, and that is pretty wild. But yeah, 40+% in just the last couple of months. Apple's had a great comeback story, as has Tesla. Amazon still trade in the 190s. I'm covered on Amazon up to like 210. I have a lot of leaps on Amazon. I have a bunch of naked puts. I've got some big wide open credit spreads. Amazon is helping me make quite a bit of money without actually owning the stock. But I have shares of Amazon as well. Google, I'm looking for plays on Google, mainly out of the money credit spreads. Meta, got a couple of things going here, some out of the money credit spreads and out of the money bear call spreads and bull put spreads. Netflix has earnings this week. So we're trading here at 652. I'm probably going to look at pricing out an earnings play on Netflix. We have some overbought conditions on the weekly. We're sitting right in the middle. I'm just going to look to see, do we blow out expectations and have a move like that? Is there a lot of volatility coming into Netflix? Maybe. Okay, we're sitting here near all-time highs. Could we justify, king of the streams to the upside with revenue growth and subscriber growth? Or is there something where, they say something the market doesn't like to hear, like, more sharing, more price increases, which price increases for consumer is bad, but price increases for the company is good. So I'm curious, whatever announcements or developments happens with the earnings calls on Netflix, what does price do? More than likely, my trades on Netflix will probably be, I'll probably go out to next week, the 26th, instead of the 18th, 19th this week. Yeah, so 7/19 is this Friday, and 7/26 is next Friday. So I'll probably go out an extra week on that. Okay. Nvidia at 130. I'm playing this one both ways out to August 2nd. I'm looking for some volatility here. Do we get up to 140? Do we get down to 118? Do we have any follow through there? Nvidia has certainly calmed down over the last couple of weeks after, couldn't do anything wrong, always going to the upside. We were up, 20 to 30% just after that split. And then we topped out here around 140. We haven't touched that level in the last couple of weeks. So if we have a bit of a, decline coming, okay, fine. There's still plenty of trend line support. There's pockets to go after, look for buying opportunities. There's a lot of arguments that Nvidia still has just all sorts of upside potential. So let's find out, right? Is this, high to low, lower high to lower low? Does it pull back into the, the low 100 levels? Is that a spot where it just gets picked up in a big way and resume buying? Possibly. At this point, that's what I'd be looking for. We established a nice little trend line here. If price goes, sideways or angle slightly down, is that our next big spot to look for a buy? So I love Nvidia in the low 100s. Using options around a core position to lower your cost basis and give yourself just plenty of upside potential on it. Okay, and then Tesla 259, very volatile last week. Very volatile. Tesla got hit extremely hard on Thursday. It was down like 8+% on Thursday. Came back in a big way Friday, gapping higher again this morning. So are we back up to, is that it? That was your dip on Tesla? Maybe. I mean, I guess we'll know if we crack the highs here at 272. But if it's, Thursday put in a bit of this ominous candle, does it struggle to break the highs? I did some ratio spreads in the 200s. I did some out of the money bull put spreads. I still have some naked puts all the way down here in the 115 to 110 zone. I think, again, I may not own shares of Tesla as of now. I dumped a lot of those shares in 2021. And then I started to do a lot more options. I took some shares on here in 2023, traded a bit of a head and shoulders pattern. Anyway, I've been in and out of share ownership. A lot of it's just been options and then trying to pick my levels where I want to own it. But again, a big comeback story here, similar to Apple, 140 all the way to 270, just looks pretty incredible. And now we're breaking some structure and some trend lines. I mean, it's up 100% in the last couple of months. Pretty wild stuff. So if it stays that way, let's see if we have a, break to the upside. If it stays here without having too much of a decline, then we're going to see if these bulls want to keep ripping to the upside. I've measured this move. That's why I have the yellow boxes. If this is the all-time high in Tesla and this is the head and shoulders pattern, forward crossing 1435, that's a good thing. Shout out to Tasty Lies Mike Butler out there, who's been holding a forward position for the last couple of years. He said he dumped it at the Chicago conference. I'm still holding forward. I've got a couple of clients that are holding some forward with me. I might look at the same thing, maybe $14 to $15. I might just go ahead and start getting out of my position, or even doing an in the money covered call, so I get the extra credit, know that it's going to get called away for a good profit. But that's a nice little move on that. So anyway, that just chart alarm came up. But my measure move on Tesla, all-time highs, couple things. If we have low to high and we have a symmetry move, that gets us towards 320 to 330. If we have a head and shoulders and we break this neckline, if this is my neckline right here, that measure move is, I went a little bit into that neckline. You can see my yellow box is not perfectly at the highs. But if this is the resistance zone and that's my neckline, then there's my projected move. So, Tesla up to 320, 330, very, very straightforward target 1. And then my measure move up here, target 2, which is at all-time highs, that put us around 450 to 460. So I like Tesla. Am I just, jumping in and buying up shares? No. But I would be willing to kind of dollar cost average in, or trade a lot of options and be willing to own it at prices that I set. So set your strike prices. If I do a ratio spread, the 200 by 205, I have a -2 at 200 and I have a plus 1 at 205. So if I own the shares, I would own the shares at 200. I would take a $5 credit on that ratio spread. In addition to, I think I took another dollar and change on the on the ratio spread itself. So for me, I'd probably own the shares around 193, and 193 is okay. That's a nice little discount if I get it, but otherwise, price stays where it is. Price stays up. Price goes sideways. Price goes down a little bit. I just get paid on the income side of the credit spread. Okay. All right. Anything here for our gap open? Chart alarm's going off. There's 4. Let me take a look at that. So we're up. Chart alarm set at the all-time highs in the SPY and the recent low from last week. NASDAQ, same thing. A little bit more ground to cover on the QQQ. Chart alarm all the way up to 503.50 or down here at 490. That's a big, wide open space with not a lot of news this week outside of earnings. So from what I could see on the calendar, I think we have some Fed speakers this week. We have CAD CPI on Tuesday. We have Powell speaking. What's he doing today? Economic Club. Okay. CPI for Canada, CPI for the UK, employment news out of Australia, employment news out of the UK, ECB rate decision looking to pause at 4.25. So they're not looking to cut. Maybe there's a surprise cut there. Maybe there's not. Unemployment claims in the US on Thursday, press conference on Thursday, retail sales for Canada on Friday. So US wise, we have some Fed speakers in the background, but it's really a non-US focused week. I think it's going to be all eyes on earnings as we kick things off this week with more investment banks, sprinkle in some consumer plays with American Express, United Airlines, and then look at Netflix for a Mag 7 or a top 10. That's really what the US is going to focus on. And we'll see if that translates into good price action, or maybe it's a quiet week. Okay. All right. Any other questions? I'm going to jump on live in the next 20 minutes with the A1 trading team. If you want to join me for another bonus session, I'd love to have you come back. And that's kind of it for the Pulver report. We did all the live settings here in my watch list, and I will just be taking my chart alarm. Sync the trades I'm going to look at this week. Probably some earnings plays. maybe plural. Certainly Netflix is one that's going to be more appealing, and then looking to see how I can position and profit from something on the Russell. If this is a catch-up trade, as much as I want to be aggressively bullish, and there's ways to do it, but I think I just want to be cost effective. I mean, I've turned I had a May debit spread that I've rolled out to August, and I'm actually going to turn that into some positive profit, which is nice. I mean, I was expecting to lose about $4 on that trade per contract, and now I'm looking to make about $2.50 per trade on that contract. So not too bad. And then longer term, I've got a 185 by 225, and I paid about $30 for that debit, and I'm looking at about $40 of profit. A couple of contracts on that. So if I can clear, $10 credit, fine. I also have a bunch of trades running on the IWM. I have a bunch of trades running on the Russell, which is RUT. So there's your Russell. If you're trading similar to your SPX or NDX, I have a bunch of out of the money credit spreads on the Russell on the RUT. So I want to trade the IWM. I'm going to take a look at that here in just a few minutes. So if you want to hop on into, we'll just come back to the channel here in about 15 minutes. So come back to my channel here, youtube.com/Chris Pulver. I'll be dual streaming with A1 Trading. And I'm just reading here financial news. Moody's just came out. We expect the Fed funds rate to be reduced by a cumulative 50 to 75 basis points in 2024 and another 100 to 125 through 2025. I mean, that's what we're forecasting with the watch tool. 50 to 75 basis points. Well, that means they're looking for a cut in September, a cut in December. That's Moody's. Why is everybody chiming in right now on rate cuts? Because it's probably happening. The rate cuts from the CME watch tool, it's around 90% right now for September. We still have a December rate decision. I know that Powell can say the same thing he always says, which gives the market no real direction, but the market seems to be ignoring his kind of neutral to hawkish comments. I look at this tool, market's still anticipating a rate cut. And if they get one in September, they're still forecasting another one for December. Okay. In fact, this is interesting. The market's look at this. Okay. Rate cut expected for a high probability in September. It looks like the market's anticipating another one in November. Yes. Look at the probabilities. So 25 bips cut here. Go to November, another 25% cut here, expected to be 60% probability, and then another one in December. So market's looking at now cut in September, cut in November, cut December, and then more cuts coming probably quarterly. So we'd have, rate cut here in March, rate cut maybe May, June, rate cut maybe September, October, and then another one end of the year. That'd be another 100 basis points. So if we have 75 basis points here, and then another 100 by the end of 2025. Okay, so you're down 175 basis points going into the end of the year. If there's possibly another one at the end of the year, but we're looking between 1.75% and 2% in rate cuts. Is it too much? Is it actually going to happen? Inverted yield curve. I mean, weakening labor market. I think this cut is more of the optic cut for the consumer. But if we start cutting September, November, December, man, this Fed is starting a rate cut cycle that probably the market's going to want to see, and any deviation from consistent cuts might not be a good thing. So I don't know. I'm still not fully confident and trustworthy that the Fed's going to get this all right. I think that something in the bond market's going to be nasty and volatile. So anyway, just keep your eyes on it. But we'll be watching it. We'll be watching it here, discussing it, and figuring out how to navigate and trade it. Okay, I'll see you in 13 minutes. Come back to the channel here in about 13 minutes, a small break, and I'll be back, and I'll jump on with Nick and the team at A1 Trading. So we'll be right back. Join again at 10 a.m. Eastern Time with Pulver Reports plus A1 Trading. Boom. Okay, see you in a little bit.